Hey, good afternoon, everyone. It's the top of the hour. Thank you for taking your time to learn more about non-QM products. My name is Jeanmonod. I'm a Regional Vice President of Sales here at Angel Oak Mortgage Solutions. We had a record number of registrations for this webinar, so we're going to give everyone a few minutes just to log on. We appreciate those who've logged on early. Unfortunately, there's no prize, but we do appreciate you taking and investing the time in your future. So we'll introduce the panelists here in a couple of minutes. So like I said, we had record number of registrations. Last month was a great month for non-QM here at Angel Oak, and the future is only going to be brighter. So we really appreciate all of you taking your time. There's still a lot of people logging in. Looks like a slot machine going on here right now. So it's all it's all good. So we'll give us about another minute and we'll get started here. So just thank you everyone for joining us. I see some familiar names. Thank you, Kim Tanner, for joining. Kim Knuckles, thank you guys. We really appreciate it. Just be patient with us. We'll get started here in about 45 seconds. Lauren, thank you. Kyle, thank you. So we really appreciate all of you joining us here, taking the time to invest in your future. I promise you will not be disappointed. We've got two subject matter experts, and we'll get started here. Let's get started here. So, hey, thank you everyone. Again, my name is Jeanmonod. I'm the Regional Vice President of Sales here at Angel Oak Mortgage Solutions. If this is your first deep product dive webinar, I promise you will not be disappointed. I've got two subject matter experts. But before I introduce them, we're going to tell you this is strictly product driven. It's not about the 7 securitizations Angel Oak has done since the pause in March. It's not about the 25 enhancements we've had since May 1st. It is truly about how we do and what we do and how well we do it. So it's all about you guys are investing an hour in your time to learn about the products that are here today to help you grow your business. So before we dive into these products, I want to introduce a couple of subject matter experts. One, we have Keith Hale from California. Keith, introduce yourself to the audience, please.
Hi, my name is Keith Hale. I'm in wonderful Sacramento, California, and I'm an account executive here at Angel Oak. And I'm looking forward to sharing my knowledge and our company products with you today.
Yeah, great, Keith. Yeah, we're looking forward to having you, Keith, on this call. I know you're fairly new to Angel Oak, but you're definitely experienced in the industry. So you're a welcome addition to our team, and thank you. Next up here, I'm lucky enough to work with this gentleman on a daily basis. In fact, we're both out of our sunny Atlanta office today. And Scott Grubel, please introduce yourself.
How you doing, everybody? My name is Scott Grubel, account executive here in the Broward County, Florida, Broward County area. Coming to you live today from our headquarters in Atlanta, Georgia. So happy to be here and looking forward to discussing a little more details about all of our programs.
Yep. Thank you, Scott. Scott's kind of being a little humble. Scott was a top unit producer here in Angel Oak in 2020. So you definitely have a subject matter expert on here. A couple of housekeeping rules. We want to be really conscientious of your time. But, if there's a lot of questions coming up, we've had a few of these where we've gone over the hour. So just so everyone knows, this is being recorded and this will be sent out to you. If we don't get to your questions, we promise we will have your local account executive reach out to you within 24 hours of today's webinar to answer your question and then also introduce themselves if they haven't already. So without further ado, definitely throw your questions at us. We've got the experts here. So this is Angel Oak's website, angeloakms.com. M is for mortgage, S is for solutions. So it's very easy to use website. It's very intuitive, and we'll teach you about a couple of quick tools after we go through the programs, because we know that's why you guys are here, is to learn about what's out there and how to expand your business. So let's jump right into it. Keith, if you don't mind, give us the highlights of the bank statement program.
Yeah, so our bank statement program, we started credit scores at 640. We'll go to 90% LTV with no mortgage insurance. We have loan amounts up to 3 million. We'd like a minimum loan amount of 150,000. You can go 12 or 24 months bank statements, personal or business. We like to see 4 years from a major credit event. So that'd be a foreclosure, a bankruptcy, a deed in lieu. All of our rates are 30-year fixed. We do require that you've been self-employed for at least 2 years. And a great thing is the borrowers can own as little as 25% on personal, and 50% of the business on a business bank statement program. You can do cash out, you can do a purchase, you can do a rate and term refinance. We'll allow owner occupied, second homes, and non-owner occupied. We have a 40-year interest only fixed available that would then roll into a 30-year fixed after the 10-year interest only period. Yeah, those are some of the major highlights of the program.
Yeah, great start, Keith. I really appreciate it. We have some really good questions coming in. One of them from Toby: will these pages be available to you? This is the website. There's a couple of things at the end of the presentation we're going to share with you that you can also access. But all this information that Toby's asking the question. I apologize for that. All these information that Keith just covered is available to you today, right now on our website, and is always updated. And as if some of you are jumping on a little later here, we've had 25 enhancements since May. So the best thing for you to do is to go to the website, and you'll get the latest and greatest information there about these programs. So these questions, Scott, right off the bat, we have: how does a 1099 work for the self-employed borrower?
Yeah, so great question. So, like John said, we've been enhancing the program, and the 1099 only option is one of the enhancements we had in the last 12 months. The idea here is to offer as many resources, many solutions as possible for your self-employed borrowers. So specifically your 1099 independent contractors, they really have two options here. They can go with a personal bank statement loan, which is an option we've always had for them. Pretty straightforward. We total up the deposits, calculate the income, and go from there. Or there are a lot of times where you have some borrowers where the bank statements might be a little bit more detailed and complicated, or what we see most of the time is there's two people on the bank statements, and maybe the borrower only wants to do the loan under one of those individuals. So we take the 1099 for either the last 2 years or the last year, and we can use the 1099 by itself to calculate the income. We do this a lot, believe it or not, for realtors. The realtor community has taken advantage of this program. A lot of realtors had a really good year last year in 2020. So we're able to use just their 2020 1099 for qualification. For the current year to date, it's very similar to a full doc in the sense that we're going to ask for their most recent bank statements, January, February, March, just to make sure that the income is still in line with what they earned from 2020. But it's a super simple, easy, straightforward program. Somebody that's 1099, we literally can do it with just the last 2 years 1099s or the last year 1099, along with the year-to-date information to make sure the income is still in line, and you're good to go.
Yeah, so Michael, hopefully Scott has answered your question there. Great questions. Keep them coming. I mean, again, we usually don't answer them all. We've had some great webinars every month. This is our 7th one. And again, we had over our record registrants for this. And again, you will get a copy of this. So Keith, this is going to sound like an easy question, but what's the difference between 12 months and 24 months?
Well, I mean, first of all, the interest rate's different, right? So we have an 8th to rate. That's number one. And the calculation is different, right? So, and how we calculate the bank statements would be a little bit different. So, but either one works great. So if your borrowers feel that they have 24 months and they can bring it to us, then that's great. And if not, then give us 12 months and let us look at the recent 12 months bank statements. Either one works fabulous for us. We'll do either one.
Yeah, and the benefit, if I'm your account executive, I'm saying, get me all 24, right? Because guess what?
Yeah.
Angelo calculates the income for you. We have a team of experts that just calculates. All they do all day is calculate bank statements. So, what Keith said, the pricing's better with 24. So why not get us 24? You're not having to do anything extra but ask the bar for those additional 12 months. And let us, like Scott said on the 1099, let us coach you on which way you need to go. So great start here, Keith. Another question here. So Scott, I'll throw this over to you. What if you have one borrower who's self-employed and another borrower who's W-2? How does that work? Can you do it?
It's a great question. Yes, absolutely. We can do that loan, and we can use both incomes and combine the two. We see this a lot. Two borrowers on the loan, could be husband and spouse. And basically you have one that owns a business, or maybe they're 1099. Either way, they're looking to use bank statements to qualify for their income. And then you have the second borrower who's a W-2 wage earner. Well, yes, absolutely. We can use the W-2 wage earner's standard income on a W-2 standard income calculation, along with whatever income we calculate from the bank statements, and combine the two for qualification. And there's a lot of hybrids to this, guys. We can get very creative to structure these loans. So let's say you have borrower A. Maybe borrower A owns two businesses, and we can use the income calculation from each individual business and then combine that with borrower number two's straight W-2 and pay stub income. It's a very versatile program, but the answer is yes, we can combine the two for qualification.
So great, Scott, as always, right on top of things. Keith, talk a little bit about the 40-year interest only, if you can. That is a question we received here. So sorry about that.
Yeah, so another great enhancement to our product lineup, across our lineup. And it's a 40-year loan. So all of our loans in Angel Oak are based on a 30-year fix. We don't offer any ARM products at all, which we believe is a benefit to the borrower and to the marketplace. So if you want to do interest only, you'll go to a 40-year amortization. The first 10 years of the loan will be interest only. So the borrower will just be paying the interest on the loan, and then it will roll over to the 30-year fixed loan that we just spoke about. It's a great option for borrowers who want to realize a smaller payment. I just had one with a borrower who was buying a large home and wanted a lesser payment for X time, and felt that if they wanted to put more towards the principal, they would, but didn't have to. And so that they opted to do the 40-year interest only.
Yeah, Keith, I get to work with Scott on a daily basis, and I learn a lot from him. And that 40-year interest only for that self-employed borrower, they're all about cash flow, right? They're all about reinvesting in their business and themselves. And Keith, you even mentioned it earlier. We do purchase, refis, cash out. We're seeing it all across America right now with home ownership and multiple offers, and it's the self-employed borrowers that are buying those luxury homes. It's not those W-2 borrowers. And as Scott mentioned on 1099, realtors have had outstanding years, and loan officers have had outstanding years. So let us help you cash flow with that 40-year interest only. It just totally makes sense.
If I can add to that, too, Keith mentioned the interest only program goes up to 85% LTV on the bank statement side. That's something a lot of people are not aware of. A lot of people automatically think, all right, we're going to be capped at 80%. No, on a primary, we can actually go up to 85 LTV on the interest only program. I don't think it's utilized enough. It's the first 10 years interest only in this market, really, with as hot as the market is in a lot of different areas of the country. Your first 10 years, complete interest only, you get to fix that rate in at today's rate. And then after those 10 years, it amortizes to that 30-year fix. You're either locked in at today's rates, which we know are historically going to be extremely low, or they can refi out of it 10 years from now. But it really presents a lot of options. And keep in mind, we can do it on second homes as well. We're seeing a lot of people buying second homes in different parts of the country, moving from other areas, et cetera. So the fact that they can add that interest-only option there provides a lot of flexibility to them. Like you mentioned, John, I know in my market down in Florida, our loan amounts have gone up significantly because I think, what was it? I saw a statistic that I think year over year, properties over $1 million are up, like 40, 50% in terms of sales. So we're seeing huge loan amounts come in, and this interest-only option really comes into play.
Yeah, great points, Scott. All great points. And Keith, so a couple of questions we have here is, what's the maximum LTV at the lowest score that we have for our bank statement program?
So with a 640 credit score, you can go all the way to 80%. So that's fantastic. I mean, it's definitely unique to the marketplace.
And what's the score for a 90%, Keith?
So you go to 90, you're going to have a 700 FICO score, and that will give you our max LTV.
Yeah. So
but
that's a huge point. Scott, the next question that came in, because you did such a great job with the interest only, is there a hit to the rate for interest only?
There is. The hit to the rate is only 1/4 of a point up to 80% LTV. And then if you're going to take advantage of it at 85% LTV, it's a 1/2 point to the rate.
Yeah.
Keep in mind, though, at 85%, even though it's a little bit higher of a hit, there is no PMI. So you have to factor that in as well.
That's a great point, Matthew. Hopefully that answers your question. We appreciate the questions. Keep them coming in. Let's see. We'll talk about how a broker gets paid when we go over our quick quote tool. So we know that's really, really important to you. So we'll get there. I promise you. I think Brett, you asked, what's the max LTV? Hopefully Scott answered that at 85 with interest only. So a couple other questions here that we have. Let me see here. Second homes and investment properties. What's the max LTV, Keith, on second homes and investment properties?
So second home will go to 80%. That'll be our max LTV on the second home. Non-owner will go to 70% on the bank statement program.
Thank you, Keith. So Lisa, yes, the question here is, we do a lot of realtor loans, as Scott mentioned, whether it's 1099 or bank statements. We know your referral partners have been having record-setting years, so they're also looking to upgrade or get in these hot markets.
And if I can add to that on what Keith mentioned, yeah, we actually moved up to 80% recently as well on investment properties. So we have both second homes and investment properties available to you guys now at 80% LTV.
Yeah, sorry, I just did want a 4 unit, so I apologize. I was considering the 4 unit I just priced yesterday, and that was at 70%.
Hey, the questions are coming quick and furious. That's why we have 2. Here, so
out off the press.
I'm going to the memory bank of what happened yesterday. Sorry.
No, but Keith, you touch on a point, Keith, that we've had 25 enhancements. Things are changing. We're going to show you tools that near the end of this presentation, we're going to show you tools that you can use 24/7. Keith and Scott might only be available 23 hours a day. So our quick quote tool is available 24 hours a day, and you can run scenarios there all day. So no, it's all good, Keith. We're going to talk about investor cash flow. We're also going to touch a little bit on what's happening in the agency market when it comes to second homes and it comes to investment properties. So bear with us. We will get to those questions. A couple more questions. I know we've spent about 20 minutes right now on bank statements. We still have some more questions. Keith, what's the DTI? What's a front end DTI? What's our back end DTI for our bank statement program?
So, right now you look in the marketplace, and most companies, especially Fannie and Freddie, are stuck at a low DTI. We will go to 40 on the front end, and we'll go to a big number of 50 on the back end, which gives your borrowers a lot of room to qualify with our bank statement program.
Yeah, so thank you, Keith. So a couple of questions that came in here, and I can kind of answer those because I don't want Scott or Keith to have to say a no. I'll be the bad guy here. W-2 borrowers are not allowed on our bank statement program solely if they're W-2. We have We have some cases, and we know this is a gig economy, and there's almost 57 million people who are self-employed, and just get your hands around this, the opportunity here. And I kind of skipped a poll, but I can tell you about past polls that we've had on these monthly presentations. We've asked the poll of how many people have closed a bank statement program in the last 12 months, and it's significant. Only 23 to 25% have closed a bank statement program in the last 12 months. So there's almost 70%, 75% of you out there have not closed a bank statement in the last 12 months. And guess what? There are more self-employed borrowers out there than there are VA borrowers. So look at that opportunity. It's unbelievable. And like I mentioned earlier, it's the self-employed borrowers that are buying those luxury homes, and therefore, all of us getting a little bit more money on that. So a couple more
I think
questions.
it's important to note, oh, sorry, I was just going to add, John, I think it's important to note that for us, for the bank statement program, I've been here since 2016. This is the lowest pricing I've ever seen on our bank statement program. Rates today on this program are the lowest they've ever been. And self-employed borrowers are taking advantage of it. The word is spreading throughout the community. So it's a program that, as a broker or loan officer, you absolutely have to have it in your tool belt.
Yeah, and I think Scott, oops, sorry. I was just going to say that, the common thing that I get, I'm sure Scott gets too, is that, it's so hard to do a bank statement loan. But Scott mentioned this. I just want to reiterate, we do all the heavy lifting for you. All you have to do is gather the documentation and send it to us, and we're going to calculate the income for you. You're not going to have to play with spreadsheets or anything. You just have to submit to us the documentation, and we're going to give you what the income will be. So it's very easy to do a bank statement loan with us. And I know Scott said it and John said it, but I just want to reiterate, because the number one call I get is, Keith, bank statement loans are so difficult. And now with Angel Oak, they're very simple.
Well said, Keith. Very well said. And I know Keith answered this question earlier, so I'll give him a little time off here. The minimum FICO score for a 90% LTV is a 700 score, but there's always more enhancements coming, so stay tuned. Scott, a couple other. We'll talk about interest rates here. So Scott, let's talk about how we calculate, the expense factor here, if you can, and if you want to dive into that.
Yeah, absolutely. So it's real simple and straightforward. We'll start with the business bank statements. Big business bank statements, we're going to take the total deposits over the course of the 12 or the 24 months. We're then going to apply a default expense ratio of 50% to the deposits. And then we'll average the remaining balance over the course of the 12 or 24 months, that depending on which one we're using. That average is going to be our qualifying monthly income. Now, let's say it happens to be a business where they operate out of the home. Maybe the borrower is the only employee, he's a consultant, or he's in some sort of service industry. In that case, usually the expenses for the business are going to be less than 50%. We will actually allow you to go down to 30% expenses. So in other words, we will use 70% of the deposits. We're going to ask for a CPA letter to back it up, just to confirm, borrower's been self-employed for 2 years, and the expenses do not exceed X percentage of gross revenue. But we will allow you to use up to 70% of the deposits there on the business side. On the personal bank statement side, very simple as well. We're going to take the deposits, total them up for the 12 or the 24 months. We do have an expense ratio that we're going to apply there as well. But as we all know, on the personal bank statement side, it's usually going to be either an independent contractor or a Schedule C employee that's using personal bank statements. Every now and again, you'll get a business owner that uses it, or maybe a business owner that owns multiple businesses, in which case, by the way, we do allow transfers from those business into the bank statements, and we can count those as deposits. But basically going to total up the deposits on the personal bank statements. We're going to apply the expense factor as well on the personals. It would be 50% default, but once again, we can get the CPA letter as well to go lower than that, up to 70%, use the average, and that's going to be our qualifying income.
So Scott, what if that borrower who's going personal bank statements has a couple of months of business bank statements?
I'm sorry, if he's got a couple of...
What if that borrower who's going personal bank statements can show you a couple of months of their business bank statements.
Yep. So borrower that's a business owner, going with the personal bank statement program, he shows us a couple of months of business bank statements, so we know that the business is open, operating, and has its own account. We can then use 100% of the deposits going into the personal bank statements.
Yeah, great cover there, Scott. And Steve and Matthew, those were great questions. Hopefully we answered those questions for you. So, again, we have, account executives, we've got East Coast here today and West Coast. We have account executives across the country that can help you with your individual deals. So, and we'll show you where you can find them, if you really don't know who your account executive is. We're 25 minutes past the hour, so we're gonna keep the questions coming. If you have bank statement questions coming while we're talking about other programs, keep them coming, because we're going to get all of your questions answered here. And again, I want to remind everyone that this is being recorded and this will be sent out to you before end of day tomorrow. So we promise we will get you taken care of. So Scott, let's talk a little bit about, let me get here. I gotta move a few things around here. Sorry, guys. Scott, let's talk about our, we're gonna cover Platinum program, Platinum Jumbo.
Okay. So our Platinum Jumbo program, I like to call it your just missed prime jumbo program. But it's a full doc program. The loan amounts go up to $3 million. There is a minimum loan amount of $250, but it'll go up to $3 million. So as you can see, it is a just missed prime jumbo, but we can take some standard conventional conforming loan amounts as well. 4-year seasoning on your foreclosure, short sale, bankruptcies, deed and lose. We do owner occupied, second homes, and investment properties here, purchase, cash out, rate and term. As I mentioned earlier, it's a full doc only program. We offer the same 40-year interest-only option on this program as well. It's identical to the bank statements. First 10 years are interest-only, then it amortizes to a standard 30-year fixed product. We also offer a 1-year tax return option on this program, and on the 1-year tax return option, unlike conventional, the borrower only needs to be self-employed for 2 years, or the business only needs to be open for 2 years, not the 5 that conventional requires. That's a good little niche to know and understand, because if you have that situation, you need to go 1 year conventional, this is an option where we'll be able to get that loan done for you. But this really offers you all of the features of a prime jumbo program with extremely competitive pricing, yet you're working with non-QM guidelines in essence. You can go up to 90% LTV with no PMI. That's, great on a jumbo program. Credit scores start at 660 for this program. With a 660 credit score, you can get up to 85% LTV. And then with a 700 credit score, you can get up to 90% LTV with no PMI. We get a lot of loans that fall out of conventional and prime jumbo for a number of different reasons that we're able to get done in this program and save for our customers.
Great coverage there, Scotty. And then some people aren't letting go of the bank statement program, so I'll jump in here. So what would happen? The question here, and Nora, it's a great question. So we know a lot of self-employed borrowers have been affected during COVID. What are we going to do when we're calculating their income and if they've had a few months? Well, as I should have basically started earlier, 30% of the program, 30% of the deals Angel Oak closes don't meet our guidelines. So what does that mean to you? Well, I won't get into the whole vertical integration, but yes, we are backed by our capital side of our business, and we know the appetite that they have for Angel Oak type loans. And, so that 30% falls into great conversations you're having with your account executive about all the good things about this deal. And then we'll present that to our head of credit prior to publishing a pre-qual, because we know how important those referral relationships are to you from the buyer perspective and from the realtor perspective. So we'll take a look at that deal, Nora, and we'll see, well, maybe they've had 6 months of good income coming back or whatever, all depends on the industry there. and we'll make a good credit decision for you and for your borrower. So anything to add,
Mhm.
either one of you guys, specific to examples you may have seen in the last, it's been a year now. So anything to add to that?
I mean, I have one now, and one thing I didn't mention about my background, but I spent a lot of time as an underwriter, and I spent the majority of my career at World Savings, which we were a make sense underwriter. And Angel Oak, same thing. We are a make sense underwriter, and as it says there, our loan amounts are up to 3 million. Well, I have a loan closing that's 3.1 million, right? And it said that our credit score was 700, and we're doing it at 680. And why? Because it made sense, and we had a low LTV, we had great credit history, and we were able to make sense of that loan. And so we're going to close that transaction for the borrower. So I think that, like John said, we probably don't want to advertise, all of the exceptions, but we're a make sense underwriter, right? So if it makes sense and we can get our arms around it, and our head of credit get their arms around it, we're probably going to make the loan, which is much different than when you go to a company that has to call someone else for exceptions or guideline changes. So we don't do that.
Yeah, and to speak directly to the forbearance, well, not the forbearance issue, but the COVID issue is, look, I mean, 90% of the bank statement loans that I'm looking at today, we can look back and we can see March, April, May of last year, the deposits fell. But then we see a recovery almost every single time. Obviously, we're taking the average of the 12 or the 24 months. So we have to factor in those months that were down in the overall picture of the income, but it does give us flexibility to use the most recent 12 months or go back 24 to get a bigger picture. And again, we're using the average. At the end of the day, most of the businesses have recovered, which is what we're looking for. If for whatever reason the borrower had to take a forbearance, let's say if you're looking at a refi, or maybe they're selling a property they own, they're looking to purchase a new property, they took a forbearance. As long as they've come out of the forbearance and they've made the 3 timely payments in a row, we can still do that loan for them. So we're 100% helping out all of these self-employed borrowers that went through some tough times through COVID.
Yeah, great, Scott. Thank you, Keith, for sharing a little bit more about your background that I just found out about. So I appreciate it. A couple other questions about interest only, because obviously we've piqued an interest here. So we qualify the borrower over a 30-year AM. It's interest only for the first 10 years, as Scott alluded to earlier, but it's amortized over that 40, but it's interest only for the first 10, but we qualify them off the 30-year. So just as an FYI there. So hey, that's our Platinum program. Don't forget about it. It's a great program. We're gonna move on from Platinum, and we're gonna cover. Gotta move a few screens here. Apologize. We're going to cover our Portfolio Select. Got to move one screen a little further. Apologize. So Keith, give us a little overview here of the Portfolio Select, please.
Yeah, a great program. I call it the Save the Deal program, because we go down to credit scores all the way down to 620. We'll go 85% LTV with no mortgage insurance again. Loan amounts up to $2.5 million. Only 2 years from a major credit event. So foreclosure, short sale, bankruptcy, deed in lieu. We'll do purchase, cash out, rate and term refinances, owner occupied, second homes. We'll do investment properties, non-warrantable condos. Those seem to be a big deal in certain areas. Again, up to 50% DTI will allow gift funds. And of course, our 40-year interest only is available on the program.
Yeah, that's great job there, and I love the Save the Deal quote there. I really do love that. Just back up to a couple questions regarding Platinum, Scotty. Someone was asking, I think you covered the DTI for Platinum Jumbo.
40 front end, 50 back end. So yeah, you're talking about a jumbo that can go up to 90% LTV with a 40 front end and a 50 back end. That's kind of what I meant when I said you've got all of the features of a prime jumbo with non-QM guidelines applied.
Yeah, and then the max LTV for non-owner occupied, the questions here for non-owner occupied investment properties and second homes with non-owner occupied investment properties are one and the same. I apologize for that. Is 80%. And you'll always hear me say as of today, because things are continuing to change. We've got, 11 months under our belt post-COVID performance, and everything's performing really well. So I see in the next 60, 90 days some more enhancements coming out. No pressure to our product team. So, but thank you, Scott. Keith, I'm sorry for covering Portfolio Select. Scott, we're gonna get
I want to mention one more thing about that real quick. I just want to mention that our Portfolio Select is a full doc program. Just wanted to mention that.
Yeah, thank you, Keith. And Keith mentioned save the deal. We also have other account executives in the company call it a 2-for-1 deal. Get that borrower into that home today, and as they get that seasoning, further and further in their rear view mirror, then you refinance them possibly into an agency loan. So you're going to get the boomerang on that second deal, as long as you're staying in touch with that borrower and making sure they're doing all the things they need to do. So 2-for-1, save the deal. There's a lot of things we can help you not just grow your business with the initial purchases, but the refinances going forward. So just wanted to share
John,
that.
If I can add a little something on the Portfolio Select, like Keith was saying, save the deal. So real life experience. The bread and butter, the heart of our business is obviously our non-QM programs, but as many know, during the refi boom, we also helped out. We did a little bit of agency. And so I had real life experience with an agency loan that came in. We were running through DU or LP, and then something popped up on Fraud Guard and that nobody knew about. It wasn't reporting to credit. The borrower never disclosed it to the broker. Now this Fraud Guard pops up and we have a foreclosure we're working with, or there was an issue we were working with. Normally, if you sent that to an agency lender, that loan's going to die right there. We were able to simply flip the program into the Portfolio Select, save the loan, get the borrower into that property, and then, like you said, you have the 2-for-1. It's really a Band-Aid. You're going to get them into the property, you're going to get them into the home, they're going to get settled in, and then hopefully once they reach the seasoning point of whatever issue they had, they can then refi into an agency conventional loan a couple of years down the road or however long it might be. So that was real life. Like I had 3 or 4 loans that during that little time when we were getting a lot of that agency business, we were flipping into this program that otherwise would have died. Something that I think a lot of our brokers and LOs and customers really need to know about.
Yeah, Scott, very well said. And that's a real live situation. So great story there, Scott. We appreciate it. Scott, just touch a little bit. You touched a little bit on income being a little sporadic, maybe for some self-employed borrowers on bank statements. Talk about our forbearance policy, if you can spend a couple of seconds doing that.
Yeah, the forbearance policy, as I mentioned earlier, basically it's very similar to the conventional forbearance policy. Is we need, if the borrower's been through a forbearance, we need the borrower to be out of the forbearance completely. Forbearance has to be removed, and then once the borrower has made 3 timely payments on their mortgage, we can then do a loan for them both on the full doc side as well as the bank statement side.
Thank you, Scott. And Tammy, hopefully that answers your question. We appreciate the questions coming in. Again, just for everyone, this is being recorded and we will get this out before end of day tomorrow. So Scott, while you're hot, let's talk about a really great program, and we can touch on what we're seeing from the GSEs and some other information to help everyone close more loans.
All right, so yeah, investor cash flow. I love this program, love talking about it. As we all know, there are a lot of investors out there taking advantage of a lot of opportunities out there in the marketplace. There's people buying properties in different areas of the country as investment properties that, for a number of different reasons. This program, if you work with any investors, is an absolute must know. We go loan amounts on this program go up to a 1.5 million. And the minimum is only $75,000. So if you have investors that like to go into some of the condo market or maybe different markets where you have the lower loan amounts or put a lot down, you can take advantage of that. Qualification for the program is based strictly on the property's cash flow. So to break it down, basically is if your proposed mortgage payment on the subject property, if it's a purchaser refi, is $2,000. As long as the rental income from that property is $2,000 or higher, the loan qualifies. 1-to-1 DSCR, 100 DSCR. Okay. Now, let's say for whatever reason the DSCR or the rental income comes in low. Your proposed mortgage payment's $2,000, but the average market rent, and by the way, we get that from the 1007 on the appraisal, the rent schedule. Let's say the market rent comes in at $1,500. Okay, well, you're not going to lose that deal. If the borrower has a 700 credit score and they're putting 30% down, we actually don't even care about the debt service ratio. Doesn't matter what it is, doesn't matter what that rental income comes in at. As long as it's a 700 score and a 70 LTV or less, no DSCR required. There's no income required whatsoever. It's a true no income, no employment verification loan. You're not even going to list the employment or any income on the 1003 when you send this into us for a pre-qualification. And another amazing feature, properties can be placed in an LLC. Now, that actually applies to investment properties, to all of our programs, on the Portfolio Select, on the bank statement program, on the Platinum, and on the investor cash flow. So we are friendly to LLCs on investments, on any programs. And there's no limit on the total number of properties that the borrower owns. So think about that, because that's an issue you run into a lot when you have investors using conventional. They have that cap on the total amount of loans or properties they can own. We don't have that cap with this program. As I mentioned earlier, you can do a purchase and rate and term up to 80% LTV. So think about that for a second, guys. An investment property purchase or rate and term with no income verification, no employment verification, with only 20% down. On a cash out, we can go up to 75%, but we do cash out on that as well. Another question I get a lot is when we're looking at the rental income to calculate the debt service ratio, we are taking 100% of the rental income. We're not discounting it at 75%. If your 1007 rent schedule comes in and it's $2,000, we're using that full $2,000 to cover the proposed mortgage payment for qualification. Last but not least, guys, and this is huge, we offer the 40-year interest-only option on this program as well. So if you think about it, for investors, all of your investors, the number one thing for them is cash flow, right? They're going to rent that property out. They want to make sure they're getting as much cash flow as possible on a monthly basis. If you're able to add an interest-only feature to an investment property, that's the best cash flow they're going to get. The 40-year interest-only option with the first 10 years interest-only is available on this program as well. This program is, I can't tell you how popular it's become. Investors out there in the community are aware of it. They're taking advantage of it. By the way, you only need a 640 credit score to get up to 80% LTV with this program. That's it, just a 640. Again, I think it's one of those programs that, again, as a broker, loan officer, you absolutely have to know this program inside and out to be able to offer it to your customer base. As we all know, to add to it, that a lot of investors over the last 5 or 10 years were buying properties and using hard money loans. We are seeing a little bit of a refi boom, so to speak, where those people are aware, those investors are aware that this program is available, and they're refinancing out of a hard money loan that they locked in at maybe 9%, 10%, and they might have a balloon on, into this program where pricing actually starts in the 4s. So it's an incredible program.
Yeah, so Scotty, great cover there. And usually, I don't know what's going on with me today, but one of the polls we usually run ahead of time is, have you closed an investor cash flow program in the last 12 months? And consistently over the prior 7 months we've done this presentation, it's in the low 20s to high teens. So again, a huge opportunity. Scott covered it really well. Keith, a question we have, is there a prepayment penalty on our investor cash flow?
There's a standard 3-year prepayment penalty, and it can be bought out if you so choose, but there is a standard 3-year prepayment penalty. And I was going to say too that Scott covered this, but I just want to reiterate because he did a really good job, and I just want to bring this out, is that over the years the investors were using hard money loans, and if you look at hard money loans to this day, we research their guidelines, they're more strict than our guidelines, and their interest rates are starting in the 7s and 8s and sometimes the 9s, right? But they don't allow for a non-DSCR less than 1 or less than 1.1 something. They don't allow for some of these things that we do. So Scott covered that, but I just want to reiterate that this is a great program to really help grow your business, and our interest rates are fabulous for these guidelines that we've set. So I would really take a strong look at this.
Yeah, Scott, if you covered this, I apologize. I'm trying to go through questions here. One of the great things about this, we don't care how many properties they currently have and have financed. We're just qualifying that or off that subject property. So you're not coming in with a stack of tax returns and lease agreements and all this other stuff that requires days, if not weeks, to acquire. So so that's a great feature about this program. And of course, what Scott said, allow them to close in an LLC. So keep the questions coming. I think the question, Scott, and I don't know if you covered this, what was the lowest credit score we could get for the maximum LTV?
640 credit score. A 640 credit score on this program will get you up to 80% LTV. Investor can purchase, no income verification, no employment verification, 20% down with just a 640 credit score. And to what you were mentioning before, John, we don't care how many properties the borrower owns. There is a reserve requirement for this program. It's only 6 months reserves, and it's only on the subject property. So as you mentioned earlier, that's the only thing we're concerned about with this program is our subject property.
Yeah. And then Scott, when there's cash out, can you use those for reserves?
Cash out can be used for reserves on all of our programs. Yes, absolutely.
Yeah, so we're really seeing an influx in this program, and I'll touch on this briefly. Lately, and a lot of you might know this already, and if you don't, stay tuned. There's a lot more information coming out. The GSEs are,
Yep.
The FHFA was originally come about for affordable housing, right? And that was owner-occupied affordable housing. Well, for all these years, they've been doing second homes and non-owner occupied. Well, they're putting in place over the next 12 months that only 7% of your portfolio can consist of second homes and non-owner occupied. So if you don't know these programs, it's going to be really difficult to get an approved eligible on these somewhere down the road. So stay tuned. We'll be sharing more information with you. We talked about the QM patch for the last 24 months, and it was supposed to expire in January. Well, these are their little revisions that they're rolling out in 2021. So stay tuned. We're going to be here. We're going to give you information. But more importantly, you need to partner with someone like Keith, someone like Scott, who's an expert on their programs, or your local account executive, and we'll show you where you can find them here real soon. Scott, let's just talk about Asset Qualifier, and then we're going to have Keith cover a couple of great tools here. So
the Asset Qualifier, we actually offer two options: an Asset Qualifier and an Asset Depletion. And this is a program that comes in handy when you have your high net worth individual borrowers. Maybe they're retired, they have a lot of assets, retirement funds, but they don't have any way of showing any income, right? Nothing's being reported right now. So I'll go through basically the highlights first. It goes up to $3 million loan amount. The minimum loan amount is $250,000. We don't require any employment, any income. There's no DTI looked at on this program. All the pricing is 30-year fixed like the rest of our products and programs. There's a 5-year seasoning on this one for foreclosure, short sale, BK. Obviously, that's because we're not looking at any employment or verifying any income or ratios. Again, the interest-only program is available. That feature is available on this program as well. We can do it on single families or condos, and we do non-warrantable condos as well. We also do PUDs. And basically, there's two options here for your borrowers with high net worths. We have your standard asset depletion that most people know pretty well. We're going to take the total assets they have. We're going to calculate a depletion number, and we're going to come up with a monthly income that we can apply using that depletion to qualify them. Or on the Asset Qualifier, and I prefer this personally, I think it's easier to qualify for. Basically, what we're looking for is if it's a purchase, after your down payment, your closing costs, we need to see that the borrower has 60 months of payments on the mortgage, And then we want to see 500K in assets left over. Believe it or not, I probably have done maybe 3 or 4 of these year to date already. So it definitely comes in handy when you have a high net worth individual borrower. And I've actually done 2 of those are refinances. On the refinance side, it's a little easier to qualify for. Sometimes people that don't have income, don't have employment, might be retired, but they have a lot of assets. They might think they don't really have much in terms of options to refinance out of a higher rate, and they want to take advantage of the current environment. This is a way that we've been able to help those borrowers out, because now all we need to see is you have 60 months worth of payments in the bank and you still have 500K left over, and we're able to get you qualified.
Yeah, great day. And I've heard some other account executives, Scott, talk about someone sold a company, you know, even someone who was divorced and you know, was paid a lump sum. So again, you know, we're not telling you, we're basically asking you to call us first before you say no to anyone. So, you know, great points there. Keith, I'm going to give you the stage here for, let's talk about, hey, and I know we didn't get to all these questions. We still have a good portion of you still on this call, and we really appreciate the time and the energy and the investment you're making in your future. We appreciate that. We will get your questions answered, I promise. And it will be no later than end of day tomorrow. But we really want to share with you some of these great tools that we have, and again, how intuitive the website is. So if you see this, again, Keith, I'm going to let you kind of order me around here and run a few scenarios, and I'll just continue to control the mouse here.
Sure. So let's go into our non-QM quick quote, and you can get this from our homepage. It's everywhere. It's on our signature lines. It's pretty much everywhere. And this is the same tool that we use, so we're not using anything different than what you would use. So let's go ahead and put in our first scenario. Let's put in 600 or 750 loan amount. That's fine. You put a 7. And then let's go with the credit score 760 or above, just what I just got. And LTV, let's go 80%. Purchase. And let's go full doc owner occupied, and this is what will be for our platinum program. This is one I just did this morning. And you can see here down below, it gives you what the max LTV is. It gives you the par rate, the terms, gives you some of the guidelines also, and the reserve amount that you would need. So, and like I said in the beginning, this is the same tool that, you know, we as AEs use when we're pricing on a loan. We just go right in here. And we'd love to show you how to do this.
Yeah. So this is great. So Scott, I'll throw over to you. Scott, how does a you know, a couple of questions we had, and I definitely want to get answered, because it's really all about how our partners are going to get paid.
So we have 2 options. We have borrower paid. We have lender paid. Our borrower paid options work exactly the same way you guys are used to on the conventional side. You have your base par rate. And then in addition, we actually offer where we can add increases to the rates to offer lender credits to the borrower. So we can get 1 point lender credit, 1.5 point lender credit, up to 2 points lender credits on the borrower paid side. We also offer lender paid pricing depending on your company's lender paid compensation plan. The lender paid pricing would increase the rate, of course, because we're building the compensation into the rate. Depending on what your comp plan might be for your company, there might be a discount point in addition to the increase to the rate, or there may not. Definitely want to reach out to your local account executive when you're pricing a loan, and they'll be able to tell you exactly what your lender paid rate is going to look like on these deals.
Great. Thank you, Scotty. Hey, Keith, let's take them through another scenario. Why don't we just change this to bank statements and...
Yeah. So we can change that to a bank statement. Let's go, 12 months or 24 months personal bank statements.
So, yeah. So the other thing here is you can see bank statements, 80%. We requested an 80%. You're actually, based on the criteria that Keith gave us, you're eligible for a 90%, and your par rate is 4.375. That's a phenomenal rate on a 30-year fixed. 4.375 on a 30-year fixed. That's with not providing tax returns. And if you tell your borrower to go to their CPA and ask them what should they take, 100 times they're going to tell them to take this rate and continue to file their tax returns a certain way. I'm going to just change this to 90%, just so I know a few of you have asked about 90% pricing on a bank statement deal. 5.25. 5.25. Scott mentioned 90%, no MI. Work with your account executive if you're really having trouble trying to sell them 5.25 rate. Borrowers are used to hearing in media that, oh, rates are historically low. This is a great loan for a self-employed borrower, I promise you, and that's a 30-year fix.
That's a jumbo. That's a $750,000 loan amount, right? That's a jumbo. Yep.
It's a jumbo loan, yeah.
Thank you. Hey, Keith,
if I can add.
Sure.
Oh, I'm sorry.
No, go ahead, Scott.
I just like to always add to everybody, credentials are not required to access this tool.
Right.
This tool should be your best friend, because you can have a customer on the line and literally just go right to our website, click on non-QM quick quote, and you can price out any scenario you want for any product or program that Angel Oak offers. No credentials required.
Yeah, great point. And we're going to get to a point where we're going to show you where you do need credentials. But again, as Scott mentioned, this you do not. You can do this 24/7. Scott and Keith are available 23/7, but this is available 24. Hey, Keith, let's take them through an investor cash flow, because we had a lot of questions there regarding pricing. So give me a loan amount and scores and
Sure, let's go. The last one I did was a $500,000 investment property.
Well, it must be nice to be in California.
I know. And the credit score was 740.
Okay.
They were putting 25% down, so we're at 75 LTV. It was a purchase, and we were investor cash flow, and then
we got that one at 5 million.
What's that?
I think we have that one at 5 million.
Oh, 5 million.
Oh, sorry. Sorry about that. Good eye, Scott.
That's the next one we're gonna get now.
that's pretty. So as you can see here, we requested a 75% LTV. You're eligible, based on that score, you're eligible for an 80%. The par rate, 30-year fixed, is less than 5% for an investment property where you're not putting any income, job information, you're not providing tax returns, lease agreements, all the fun stuff that Keith and Scott referred to earlier on our investor cash flow program. It's crazy. This is a no-brainer. And if you wanted to do change it to a cash out, we have a lot of investors wanting to go cash out. 75% cash out will go up to $300,000 cash in hand at a rate of 5.125. Guys, and guess what that borrower is going to do? They're going to invest in other investment properties. So let's get in touch with your local account executive. So let's show you where you can get it. A lot of you guys have asked about, guys and girls, you've asked about, where can I find an account executive? What states are we eligible to lend in? All the green states are the states we're eligible to lend in. You can go find Keith here, right there.
I had here.
and then Scott's in Florida. But if you click on any state, you'll be able to find your local account executive, or reach out to the regional in that area and they'll assign you to an account executive. Scott, I know we're getting close to the top of the hour. We appreciate everyone staying with us here. But this is, other than the quick quote tool, this might be the most exciting part of how we can help you grow your business. Let me log in here. As Scott mentioned earlier, you do need login credentials here. So work with your account executive to get those. And a couple of people have asked about turn times. You can close a loan in less than 30 days. If everyone's rowing in the right direction, you can close a loan here in 90 days. Scott, I'm going to let you take us through the portal here. 30 days. Inside of 30 days, we can get that loan closed for you. Yeah. So, yes, guys. So this, to me, is one of the most underutilized tools by our customers. We are basically offering you free advertising here of all of these non-term products and programs, because that's what a lot of people get. Well, how do I market these programs? How do I advertise these programs? We're giving you the tools right here. So if you start with the flyers, as John mentioned, you do need credentials. So you have to be an approved broker to access these. You can reach out to your AE. They'll get you set up with credentials. But every program we just discussed has a flyer that is 100% customizable for you. You can upload your logo, your company logo, to the flyer.
You can put in all of your personal contact information, email, address, phone number to the flyer. We do have them pre-built with compliance down at the bottom, but if your company prefers to have its own compliance, you can even edit that section as well. As you can see, this one was put together by a broker, uploaded their picture here in the corner, and a little logo up in the top right-hand side. Looks like the Angel Oak logo, but that's where you'd be able to put your logo. So you can actually co-brand these flyers as well. Let's say you were doing a presentation with a title company or with a realtor. You can co-brand and put two logos on this with two sets of contact information. And then you'll see the content of the flyer is everything we just discussed, just going over explaining the details of the bank statement program. So as you saw in the previous slide, there's one for every single program we offer: bank statements, investor cash flow, asset qualifier. One of my favorites is the program highlights, because it kind of gives you a snapshot of all of our programs on one sheet. And you can basically customize these, print as many of them as you want, and paint the town with them. It's free. Take advantage of the free marketing material. I'll tell you from experience, because I do a lot of these with my brokers. I'll go on realtor presentations with them. When you're presenting to referral partners and realtors, it really is an attention grabber, and it gets you foot in the door. When you say, hey, I want to come in and I want to talk to you guys about non-QM products and programs, bank statement programs, no income verification investment programs. These are all things they're not used to hearing about on a day-to-day basis. So their interest is piqued, and you're able to get your foot in the door and usually schedule an appointment with a bunch of realtors or referral partners. So, and then obviously use these flyers and customize them. If we can go back over, John, outside of the flyers, we actually offer full social media posts that are pre-canned and ready for you. So again, every program we offer, we have a little image there that you can copy paste to your social media. Let's say it happens to be a post you want to put out there to tell the realtor community a little bit about this program. You can literally copy paste the content right there for you. It's all pre-written for you. You want to edit it? Great. But we have a base for you to start with to explain the program to your realtors. Let's say you want to put this post out and tailor it directly to self-employed borrowers. You have some content there as well that you can copy paste and put all over your Instagram, your LinkedIn, your Facebook, any social media you want to use. One of my favorites is the stick figure videos. I'm sure a lot of you guys have seen this. They're utilized in a lot of marketing, the whiteboard videos. So these videos, again, one for every single program we offer. What you'll notice is that there's no mention of Angel Oak whatsoever. These are all designed as you marketing, the loan officer, the broker, marketing to your referral partners what a bank statement program is about, or a program with a housing event, or an investor cash flow program. Super cool. A lot of people like to use these and tag them onto their website. You can email these out to people. You can put them on your social media as well. And then last but certainly not least, the presentation. So we actually have, it's a two-part here. We have a realtor presentation already set up for you on PowerPoint. We're actually about to unveil a brand new one, I think, here real soon.
Yep.
And prior to the presentation, we actually have a flyer where you can promote the event. So like I mentioned earlier, let's say you get your foot in your door, we're going to come, we're going to present to a team of realtors. We have this flyer we can put together that kind of explains the event, so you can hype it up, get as many people as possible to come out to the event, customize it with your name and your logo. And then if you wanted to do that presentation on your own, the PowerPoint presentation is 100% customizable as well. So page by page, slide by slide, you can actually input your logo, you can input your company information, your contact information, and you can actually edit the slide as well if you want to maybe just tailor it to how your presenting style. So John's opening up now, but you'll get a good idea how page by page it's going to explain about non-QM products and programs. Again, guys, this is free. These are just tools that we are giving to our customers for being an approved broker with us to help market these products and programs to your customer and referral base. But as you scroll down a little bit there, you'll see that everything is customizable. Each slide, you can go in there and customize. It's very thorough. It's going to start from the very beginning all the way through. It's going to talk about the marketplace for non-QM. It's going to talk about how you can actually put more money into your realtors' pockets so that they can, by allowing them to sell homes to borrowers that they otherwise thought would not have qualified for. So again, guys, we offer all of these marketing tools to you guys completely free.
Yeah, how great would it be to take, whether it's through Zoom, a go-to meeting, or take a Keith or a Scott with you into an office and have them as their expertise present on your behalf that we are just one of your investors. We don't talk about Angel Oak. We talk as we are just one of, Jane Smith LO in Sacramento. Keith would just refer everything back to Jane and say, Jane's your contact. We're just the investor. It's a powerful presentation. And we did one with an account executive in Dallas about 2 months ago. And the LO we did this for has 2 investor cash flow programs that were submitted last week. So it works. As Scott said, as Keith has done, this is a powerful presentation. And it's just, I don't think people, like Scott mentioned earlier, I don't think people take advantage of it enough. But Keith, any last parting words you just want to share with our group? As we've gone over the hour, but we still have a good portion of everyone here. So thank you. Keith, I'll let you say a little goodbye here. And
yeah, I'd just like to say, thank you all for attending and allowing us to share our products and services with you. Non-QM has always been here, and it's here to stay. And of course, now with interest rates going up in the conventional world, now is the time to really start learning the guidelines and to partner with someone like myself and Scott and Angel Oak, the leader in non-QM, to grow your business and not have to worry about interest rates spiking up, and be able to service a new customer database, a self-employed customer, an investor customer. Now is the time. So please give us a call. We are here to do the heavy lifting and to help you.
Very well said. Scotty?
Yeah, I want to thank everybody for spending some time with us, for sure. Hopefully everybody got a lot of value out of it and learned a lot of it. I mean, look, at the end of the day, all of the products and programs and everything we discussed, it's all great and valuable information. But the bottom line is, at the end of the day, are we going to get your loan closed? And I like to mention that because we are the longest non-QM company by tenure. We're the largest by volume. And I think we're maybe double the closest competitor. There's only one reason we can get to those numbers, is because we're going to get your loan closed at the end of the day. That we can assure you. So it's not just a bunch of beautiful products on paper. At the end of the day, it's about delivering and getting your loan closed in a timely manner. And that's what we specialize in. We are in an ever-changing environment right now. There's a lot going on the conventional world, not only with rates going up, but with the GSEs and the agencies starting to really tighten up on their guidelines. They're starting to minimize their risk. So I think that's kind of going to be the beginning of the resurgence of non-QM. We're here to help you guys in any way we possibly can. For whatever reason you're not able to get a loan placed, for whatever reason, agency-wise, we want to be the first phone call you make.
Yeah. Well said, Keith. You touched on it. Learn these products now before your competition does. And Scotty, Keith, it's really almost pretty early interaction with you. You did a great job. So thank you for taking time out of your day. Thank you, Scotty. I get to work with you on a daily basis. Nothing surprises me. You're pros pro. And more importantly, thank you for everyone on this call. We really appreciate you taking the time out of your day. Again, this will be sent out by end of day tomorrow. But thank you, and let us help you grow your business in the future. So everyone have a wonderful afternoon, and thank you.
Have a great day. Thanks for hosting, John.
Have a great day. Thank you.